Hello, this is Solomon Davis, Right Side Trader. Today is September 17th, 2023, and this is going to be a series on options. I had a guy ask me about, he knew I trade, he knew was related with right side trading and had some service thing going on, and he had got a subscription about getting mainly they give him trade picks. And he asked me, do I know anything about it? I told him, no, I have my own. I've been doing this for a while. I have my own style of trading. I'm doing okay and stuff. And we do it right side trading. We kind of try to train people how to trade, how to see the market. We don't want to give them trades. We want to teach them how to fish. That's the whole thing. So he asked me about what did I thought, and I told him I don't know. The thing is, you can. I hope they gave you a trial period. If that trial period you make money, it's good for you. If you don't make money, it's not good for you, and you have to find something else. Check us out. And I told him, the first thing that you really need to do, since it's about options, you really, really, really need to understand options and what options are. And this guy had zero, experience, what I believe. I'm not sure. But I told him I would throw a couple videos out on trying to explain what options are I hope in a very basic way. Options are very complicated, really. A lot of people think they're an easy, quick way to make money, but they're actually really a quick way to lose money because most people don't understand them. And I'm not going to give you all in all when it comes to options. This is all for educational purposes only. No trade recommendations here. Just don't take these things. Take these things to something to study and try to get a better understanding of what options are about. That's what I'm trying to do here. All right, so let me just jump on right over to it. And it's going to be a series of videos. Because first thing, like I say, this guy is completely new. So I'm going to try to start from the beginning and I'm not going to be giving, but I'm going to give the basic information that I think I probably should have had when I first started. Although I did end up taking a few classes and all is what I did. I went and got some training from some professional option traders, really, and let them explain to me about what options are and how they made money and all. I'll just go through that. First of all, what we have when it comes to option, you have the option chain, and on this option chain, you have calls and you have puts and all. The other thing that's important here is the expiration and all, and your strikes that you actually have. In these strikes, on these particular strikes and all, you have what is called the width between the strikes, and the width between these strikes is $5. So that's one thing when you're looking at options. You can have, when it comes to trading options, I'm going to go to another one called QQQs. You can have dollar width strikes. The difference between these strikes or $1 and can get as low as 50 cents. What I'm looking at here, see, here's one where you got 368 and you got 367.50. I know I'm kind of jumping right into it. I'm kind of assuming people can see numbers, can see that. The other thing that's important here is the days to expiration. That's what this right here represents. How many days to expiration? So I'm going to be talking about that. Another something that's important, I think, in my opinion, you need to understand what delta is. I'm just pointing this stuff out right now. Like I say, it's just at the beginning. The other one of these, people talk about a lot about the Greeks. The three Greeks that I think are important is delta, theta, and vega. And this is all on this page when it comes to options. So those are some of the important things that I think you really need to know about options. Now, one of the other things is, why are you purchasing options or why are you selling options? You can do it on, it's all based on your, I guess, expectation of what's going to happen on that underlying. That underlying, when I say underlying, I'm going to be talking about the product, QQ, if it's QQQ, if it's Bank of America, you know, is it whatever you happen to be trading. And the thing is, if you are bullish on the market, should you buy a call? Should you buy a put? Should you sell a call? Should you sell a put? What is a bullish trade using options? A bullish trade using options, you actually can sell a put. That's a bullish position. Selling puts is bullish, and buying calls is bullish. So just general information right now. There's a lot of things to go along with options when you're buying or selling them, that and all. But what I really want you to get, that you can be bullish on either side of the market, on either side, all based on your expectation, based on your account size, based on what the market, your broker would actually allow you to do, you know, based on strategies and all that other kind of stuff that if you want to deal with puts or deal with calls. Now, the thing is, now bearish, just like you are expecting when it comes to being bearish on the market and using options, SH. If you're bearish on the market, you would buy a put and you would sell a call. So it's all based on what your broker allows you to do, you know, what's your account size, what can actually be done, and what's your overall expectation. And based on, gets back to theta, vega, delta, when it comes to looking at what are you going to actually use when it comes to being bearish or bullish on the market. Now, I just used two terms there, bearish and bullish. What does that mean? Bearish is kind of like, bearish is not kind of like, bearish if it's the market is going down. I'm going to jump over to a chart now. This is one of the charts that I normally use and all to help me see the market and all. So, bearish, right quick, this is a bearish leg in the market. The market was going down. So at that time, people would say the market is bearish. All this is the market being bullish. And this right here, right now, is the market being bullish. So that's the difference in bearish and bullish. Okay. Just some real basic stuff. Now, last little thing that I want to touch on here, like I said, I don't want to make these too long. I want to keep them short because I know for a new trader, it may be a lot of information to them and all, is this theta. Let me get back over here. This, because we're talking mainly about options, is theta. And as you can see, it's on both sides. You have theta on both sides. This vega and this delta. And these are the numbers here when it comes to delta, it comes to theta, and it comes to vega. And the same thing is actually over here. You can see this. So this is the last part that I'm actually go over here on this, and then the next video I'm gonna drill down into this a little bit more and all. But really, right now, what you want to be able to what does these numbers mean? Why is this important? And these numbers actually, the thing is, that's why I hate even going here. I usually spend a whole hour or more on just these three things here, and just to make sure you really understand them, how you find out more information about them, and all that. Because these numbers change, and you're going to need to know. On some platforms, they'll give you a number to let you know if this number is high or this number is low. And basically, when this number, in general, when this number is high, Vega is high, and Vega is volatility. When volatility is high in the market, you really want to be a seller of options, puts, calls, whatever it may be, ideally. The other thing when it comes to option and when it comes to trading in general, and all, this theta is time. And what this number represents here, this negative 34, and over here, as you can see over on this side, it's still negative something, negative 30, whatever it is over here. It means that this option price is going to lose that much in value each day. So what does that mean? That means that tomorrow, if everything stayed as it was and the day just went by, the market did not move and all, this option will be 33 cents based on this number lower here. Now, I'm not taking in consideration this Vega, as long as this Vega doesn't change and doesn't go up, and it doesn't move either, because this right here, these are what I'm pointing out to you are the moving parts of an option, and that's what most people don't take in consideration when trading options. Options are a living thing, pretty much the way I kind of look at it, and they can bounce around, move around quite a bit if you don't understand all its parts and how they affect the pricing of options. So Vega, if it's increase or decreases, it can cause the price to increase or decrease. Theta is going to actually show you there's a negative number here where it's going to actually decrease in price just by time going by. And now delta. Delta really is a interesting number. And as you can see, it is negative on this side and it's actually positive on this side. So what does that mean? On the call side, where the positive number is at, means that as price goes up, it's two ways of actually looking at delta. Delta is one of those numbers that reflects in price movement, or some people would say probability of it actually finishing in the money and out of the money. There, I'm going throwing two more new things at you: in money and out of the money, which we'll get into a little bit later. And right now, I want to just focus on delta, what it means with delta on this side. As price goes, as your underlying QQQ goes up in price, this option price will go down by for each dollar it goes up, the price of this option will go down by that much, by 53 cents and all. On the call side, what does that mean? As for each dollar that the underlying goes up, the option price will go up by this 47 cents. We're going to leave it at that. There's also a probability thing that people say. There's a 50%. You can say at the money. At the money is the strike that's closest to where the underlying is actually trading. Since this is trading at 370 or 371 is probably your at the money option, since that's the closest one. So it's going to have a delta of around 50, close to 50, and all. And on the put side, now you got to remember, as time goes by and the price actually goes down, this number will add to this number, to the option underlying. Now, like I said, this was going to be it. And one last key thing that I haven't mentioned, you see these $1.53, $3.06. You need to multiply all these numbers here, pricing numbers, by 100, because an option contract represents 100 shares of stock. So everything here is multiplied by 100. So if you want to buy one contract, it will cost you $306. If you want to sell one contract, you will collect, since you're selling something, that means you will receive money into your account. You will receive $306 into your account. But, I'll throw a big but there at you, in order to sell a put in most brokers' accounts, and I won't say all, some brokers are not as strict as some other brokers are, it will cost you, since it represents 100 shares of stock, it's going to cost you 370 times 100 in order to do that trade with most brokers and all. In a margin account, it may be a little bit different, but in a cash account, that's going to be the case. So that's 2 zeros onto that. That's $37,000 in order to make $300 in 5 days. And the market has to close above that price in order for you to make that money. And I'm going to leave it stop right there, just to kind of give you, because again, just to kind of give you an idea where we are heading. Each time I'm going to try to throw a little something out there about the money, but I really want to explain to you what you're looking at here first. That's the first thing. So I hope that's good, and I hope this is going to be helpful, and I'll be throwing more stuff out there, kind of just explaining options, and I will get into more looking at the chart about buying, selling calls, buying, selling puts, and looking at the charts, and when will they work, and when will they're less likely to work, and all. And I also will get in some of the requirements in order to do some of the trades. And that's all I really want to share at this time. This is Solomon, Right Side Trader, just going to starting to get into a little bit of option here and option trading. Talk to you later. Have a good one. Bye.